Welcome to the Deep Dive. Today, we're taking a close look at Just Dial Limited, specifically their latest financial and operating results. This is for the first quarter of fiscal year 2026, the period ending June 30, 2025. And we've got the primary sources right here, the official press release from Just Dial, their corporate presentation for analysts, and also the outcome of their board meeting, all fresh off the press, dated July 15, 2025. So our goal today, really unpack these numbers. We want to understand how India's, leading local search engine company performed. And maybe more importantly, figure out what these results tell us about their strategy, where they're heading, and also the broader market for local search and business digitalization in India. It should be a pretty interesting journey through their financials, user metrics, and strategic moves.
Exactly. And what's fascinating here, I think, is we're not just looking at raw numbers on a page. We're examining how a really established player, Just Dial, in the Indian market is, adapting and finding ways to grow in what's a very dynamic digital landscape.
Yeah.
We'll be looking for both the what happened and the why it matters for Just Dial's future path.
Okay, let's unpack this then. Let's start with the big picture. For Q1 FY26, what are the absolute key financial highlights? How do they stack up against last year and maybe the previous quarter? Give us the headlines.
Sure. Well, overall, the story is one of consistent positive movement in their core financial health. Pretty steady. So operating revenue came in at 297.9 crores for the quarter. Now, that's up 6.2% year-over-year YoY and also a healthy 3.0% quarter-over-quarter QoQ. So growth on both fronts. Then there's EBITDA, reported at 86.4 crores. That shows a 7.2% increase YoY and a slight 0.4% improvement QoQ. The EBITDA margin landed at 29.0%. That's actually an improvement of 28 basis points BPs compared to last year, though it did dip slightly, about 74 BPs compared to the last quarter. Little nuance there. And just for clarity, their adjusted EBITDA, if you strip out ESOP expenses, was almost identical at 86.5 crores.
Okay, so steady growth on revenue and operational profit. What about the bottom line? How did the net profit look?
Net profit was actually quite strong. It reached 159.6 crores. That's a solid 13.0% UI growth and a more modest 1.3% increase QQ. Profit before taxes, or PBT, stood at 198.9 crores. That had impressive growth, 29.3% YoY and 10.8% QoQ. Their net profit margin was 37.5%.
37.5%. That sounds high.
It is high, but there's a catch. This particular metric, the margin, actually saw a decrease 88 BPS YoY and 207 BPS QoQ. And it's really important to remember this margin is calculated as a percentage of total revenue, which includes that other income figure.
Oh, okay.
And just to round it off, earnings per share, EPS, both basic and diluted for Q1 FY26, was 18.77. That's up from 16.60 in Q1 of the previous fiscal year.
Right. So lots of green arrows, lots of growth, which is great. But you mentioned other income and how it affects that net profit margin. It looks like a pretty significant contributor on the statement. What's the story there? Is that, sustainable income?
That's a really important question, yeah, because it touches on, the nature of their income, not just the amount. Other income was substantial, 127.3 crores. That's a huge jump, 46.5% increase year-over-year and 17.2% quarter-over-quarter. The company clarifies this is mainly due to mark-to-market, MTM, gains on their treasury portfolio, basically changes in the value of their investments, apparently influenced by a fall in bond yields. It also includes some profit from selling investments.
So it's more about financial management than core operations driving that specific number.
Exactly. It definitely boosts their overall profitability, which looks good. But you have to understand it's not coming directly from their search business or SME services. It's more about how they're managing their cash and investments and, market conditions playing in their favor.
That's a key distinction for you, our listener, to keep in mind. While the profit looks great, a big chunk isn't directly from the core business. Okay, so we've got the financial scorecard. Now let's dig into what's driving these numbers operationally. What's going on with their user base, their listings? How are people actually using Just Dial? This is where we see the business in action, right?
Right, and if you connect this back to the big picture, it really shows their strong foundational engagement. They're leveraging that huge database they have. So total traffic that's unique visitors reached 193.2 million in Q1 FY26. That's up a solid 6.6% UI and 1.0% QoQ. Pretty steady growth there.
193 million users. That's a big number.
It is. And what's truly striking is the continued, dominance of mobile. A massive 86.9% of that traffic.
87%.
Yeah, 167.9 million users. came from mobile platforms. And that segment grew 8.7% YoY. It just underscores, the undeniable shift to mobile-first behavior in India. Just Dial is clearly riding that wave. Desktop and PC traffic, that was about 10.1% or 19.4 million users. That actually saw a 5.0% decrease YoY, which isn't too surprising.
Makes sense. And what about voice? I still remember that iconic 88888888 number. Is that still relevant at all?
Surprisingly, yes, it's still active. Voice traffic accounted for 3.0% of users, which is about 5.9 million people. Now, it did see a 6.5% decrease compared to last year, but interestingly, it saw a notable 16.9% increase compared to the last quarter.
Oh, that's unexpected.
It is. That 888-888888 number is still a multilingual 247 hotline. It's kind of fascinating how a legacy channel like that holds on in such a digital world.
Definitely. Okay, so huge traffic, mostly mobile. What about the listings themselves, the core database?
All right, the listings. The platform now boasts 49.7 million active listings as of the end of June 2025. That's an increase of 10.6% YoY and 1.9% QoQ. So the database continues to expand. And importantly, they're improving the quality. About 70% of these listings, that's 34.8 million, are now geocoded.
Geocoded meaning they have exact map locations.
Exactly. Precise latitude and longitude. It makes the search much more accurate for users looking for something nearby. And that geocoded number is up 18.2% YoY. They also have a huge number of images and listings, now 230.5 million, up 16.2% YoY. That really enriches the listings, makes them more useful.
Those active listing numbers are definitely impressive, shows the scale. But I think I saw a detail in the report about net listing additions this quarter. Something about that number being down. What's that about? Is that a concern?
You're right to flag that. It's a critical detail. While the total number of active listings keeps growing, the net additions, the new listings added minus any removed, was 930,625 this quarter. And that figure is down significantly. It's down 31.7% compared to the same quarter last year and down 23.8% compared to the previous quarter.
That seems like a pretty big drop. What could that mean?
Well, it could suggest a few things. Maybe they're focusing more on the quality of listings rather than just pure volume now. Or perhaps they're hitting some saturation in certain market segments or cities. For a directory-based business, that pace of new listings is pretty key for freshness and engagement. So potential headwinds for organic growth if they don't compensate elsewhere.
Okay, something to keep an eye on then. What about other engagement metrics, like reviews or paid advertisers?
Good question. User engagement seems solid. Total ratings and reviews reached 153.7 million. That's up 3.1% YoY, so people are actively providing feedback. And their system uses things like mobile verification, tags, photo uploads to try and keep those reviews useful. Then, their core monetization piece, paid campaigns. The number of active campaigns hit 617,340. That grew 4.3% YoY and 0.7% QoQ. This is where businesses pay Just Dial for better visibility and search results. It's crucial revenue. And lastly, app downloads. Total cumulative downloads reached 40.7 million, up 9.3% YoY. Average daily downloads also increased by about 9.8% YoY to roughly 7,600.
Got it. So strong financials overall, significant user base primarily on mobile, expanding but maybe slowing new listings, and steady growth in paid advertisers.
Yeah.
Now let's shift gears a bit. How is Just Dial using this foundation? What are their strategic plays? They seem to be pushing beyond just being a directory, right? What's the bigger vision here?
Yeah, this is where it gets interesting strategically. You see them really trying to broaden their value proposition, become more integrated. Their all-in-one JD app is clearly central to this strategy. They're positioning it as like a super app. It has the core search, obviously, but also things like map-aided search, live TV, videos, even stock quotes. The idea seems to be making it a daily habit app, making tasks smoother and more engaging for the user, keeping them within the JD ecosystem.
Trying to be stickier, basically.
Exactly. And then there's JD Mart. That's their dedicated B2B marketplace, jdmart.com. This is a really significant move aimed squarely at Indian manufacturers, distributors, wholesalers, retailers, the whole supply chain. It offers digital product catalogs, focusing heavily on digitalizing MSMEs, the micro, small, and medium enterprises. It's about moving beyond just connecting buyers and sellers with information to actually facilitating the business transaction itself.
That makes a lot of sense, leveraging their existing business relationships. What other kinds of transaction-focused services are they building out?
Well, they're definitely leaning into enabling transactions, directly or indirectly. They have JD Pay, which is their own solution for quick digital payments between users and vendors. Then there's JD Omni. That's a cloud-based business management tool for SMEs. It helps them run their business online, gives them their own website, mobile site, that kind of thing.
So tools for the businesses themselves.
Right, tools to operate digitally. And beyond these, they also list other services like JD Shopping, travel specifically, flights for now, bills and recharge, stocks, logistics support, and JD experts for booking on-demand services. It's a clear strategy to become sort of an indispensable digital partner for SMEs, not just a place to get listed.
So the value proposition for these SMEs is much broader now.
Absolutely. It's beyond just leads. It's about creating mobile-ready websites, accepting digital payments easily, getting more customer reviews, getting visibility through curated content like catalogs, special deals, service cards. It's about giving these smaller businesses tools they might not easily access otherwise. And crucially, they back this up with a massive physical presence. Branches in 11 cities, but also on-the-ground sales teams in over 250 cities, covering more than 11,000 PIN codes across India. Their total employee count is pretty stable, around 13,000 people. But the sales force component, which includes telesales and the feet-on-street teams, actually saw a slight increase, up 2% year-wide to over 10,000 people. That's a huge operational footprint to reach businesses directly.
Well, that physical network is definitely a major asset, especially for reaching SMEs across India. Okay, let's zoom out again for a moment. We've talked about revenue, users, strategy. How solid is their overall financial foundation beyond the quarterly P&L, and who's actually leading the company? Stability matters, right?
Yeah, it does. And their balance sheet tells a pretty positive story there. It speaks to their ability to sustain operations and, importantly, invest in future growth. Their cash and investments position is really robust. As of June 30th, 2025, it stood at 5,429.8 crores.
5,400 crores, that's a lot of cash.
It is. It's a significant pile. It's up 14.2% compared to last year and 2.9% just from the previous quarter. This signals a very, very healthy liquidity position. It gives them enormous strategic flexibility for acquisitions, investments, weathering downturns, whatever they need.
Definitely provides a strong cushion and lots of options. What about other balance sheet items like deferred revenue or expenses?
Sure. Deferred revenue, that's money collected for services they haven't delivered yet, like annual listing fees paid upfront, stood at 534.6 crores. That's up 6.9% year-over-year. Interestingly, though, it did decrease 4.2% compared to the last quarter. Might reflect timing of collections or contract renewals. In terms of expenses, their advertising spend was relatively modest this quarter, around 8.5 crores. Employee benefits expense remains their biggest operating cost naturally, at about 180 crores or over 800 million for the quarter.
And the leadership.
The company is still led by its founder, VSS Mani. He's the managing director and CEO, and he has, well, over 36 years of experience in the sector, so deep domain knowledge at the top. The board of directors seems quite diverse, a mix of executive, independent, and non-executive directors with backgrounds in finance, management, various industries. Looks like solid governance structure. And the shareholding pattern as of June 30th, it's predominantly held by domestic investors, about 74%. Then foreign investors at around 10%, individuals hold about 8.5%, and the promoter group itself holds around 7%. And just from a reporting perspective, they operate as a single segment, search and search-related services.
Okay, great overview. So let's try and wrap this up. To recap our deep dive today, Just Dial put up a strong Q1 for fiscal 26. We saw steady growth in revenue and profit. A lot of that seems fueled by significant increases in mobile user traffic, which continues to dominate. Plus, they have a continuously expanding base of active listings and, crucially, those paid campaigns from businesses. Strategically, they're pushing to B2B with JD Mart, and these transaction-enabling tools like JD Pay and JD Omni shows a really clear evolution. They're moving beyond just search, aiming to be a key player in digitalizing Indian SMEs. And underpinning all of this, as we just heard, is that very, very healthy cash position.
Yeah, I think if you zoom out, Just Dial's performance really reflects a company that's successfully leveraging its sort of first mover advantage and very strong brand recognition. They're adapting quite effectively, it seems, to the changing digital habits of both consumers and businesses in India. Their focus on that all-in-one app experience, combined with a more comprehensive value proposition for SMEs, positions them well for continued relevance. They're not just a directory anymore. They're aiming to be a digital ecosystem enabler.
Absolutely. And this leaves us and your listener with a really compelling question to think about. Given that huge cash reserve they have and this expanding digital ecosystem they're building for SMEs, what other moves could Just Dial make? What further innovations or maybe strategic acquisitions could they pursue to truly dominate the local business digital landscape in India? Especially with competition always evolving and digital habits changing so fast, what's their next big play beyond search to really cement that leadership position. Something to ponder.